Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for the futures markets. This is where we put together a plan of attack for tomorrow's trading as best we can, so we are as prepared as possible on the big six markets that we trade, which in this case is going to be the Bund, gold, bonds, crude oil, Nasdaq, and the S&P for tomorrow's trading, and that is going to be the 15th of the month. Now, there's just a little bit of news slotted for tomorrow, so, if you've been waiting this week for news to come out to get things moving, tomorrow's the day. There's a ton of stuff coming out. Now, before we get into all that fun stuff, and before we start ripping apart the charts, make sure to swing on over to Slingshot Futures, scroll down, and click on the Join the Daily Outlook newsletter. From there, that will subscribe you to our email list, so you will be notified every time one of these comes out. So you'll know exactly when it comes out, and you'll be ahead of the curve. Along with that, we talk about different statistics and different stocks that we're keeping an eye on for the next few days as well. So a really good newsletter to have your hands on. And then also at the bottom of the page in the blog, we have every day a video post that goes over the market psychology of a specific market that day so we can better ourselves for the next day of trading, as well as the major live trade room morning prep levels to get you morning traders ready. If you haven't had a chance to, sign up for a one-day trial, or if you want to go for a little bit more, check out the live trade room subscriptions where you can sign up for even on a weekly basis to see what we are all about. Now, looking at the Bund first out of the big six, we have a very strong move higher. There really wasn't much of a shutdown from the sellers. They tried getting that initial morning move, had some good bearishness to it, but then completely reversed back the other direction. And we're going to see a lot of this. Big V bottom movement. We have a big move down and then completely reverses through. A lot of the markets did that today. Now, with that big reversal, we had a very strong bull move up. It looked like they may be stalling out, but then they kicked it back off again for another rally up. We're finding a little bit of a base, just like we did over here, but with a little bit less of a bullish angle. This doesn't really have much of a bias, just kind of flat. So knowing that we're a little bit flat, chances are buyers just don't want to buy that far up anymore. We still have open major objectives to the upside at 159.93. We also have monthly resistance targets at 159.81. But buyers are going to have a really hard time being convinced to buy way up here near the highs, given the bad follow through that they've seen so far. Instead, it would make much more sense to see a pullback anywhere from 159.48, maybe 159.34, or even better if we can get a really big pullback back into the earlier area of consolidation between 159.19 down to 159.08. And that's kind of what I would like to see. I want to be a buyer, but I'm having a really hard time wanting to buy this far up. So a pullback at the very least down to that 159.48 area is where I am looking. Now on gold, a little bit more range-bound sentiment. We started with a down move, then into a new up move, and then into a down move, and then into an up move. They tried getting the down spike, finished off one more test of the highs before going back down to the lows. Now that breakdown to the downside, that does open up a lot of downside objectives with a huge seller's target at 1194.5. One big level obviously to stay concerned about is that big 1200 mark. Whenever you're dealing with those century marks, 1200, 1300, even quarter marks like 1225, 1250, 1275, etc. Those levels can play a big role in the way that price reacts around them, and it's something that we're going to need to keep an eye on. So don't lose sight of that 1200 level, but we do have some downside objectives at 94.5 if the market wants to break out. Now in this most recent breakdown, we are forming a little bit of kind of a pennant, a little bit of a wedge. Not the biggest wedge in the world, but this could just be a stall before that final leg down to finish the objective. So definitely looking to be a seller. What I would really like to see is a little pop above right into the moving average, trap those prior highs at 99, and then get a turn right back down to get that drive lower back into that 94.5 major target low. So still looking to be a seller, and we still have a lot of downside objectives below us. It's just a matter of if we can get that trap going or not. And if we don't, we should see at least some good, strong bearishness to jump on in instead. Over on the bonds, good bullish momentum to the upside today. A little bit range bound to start, but that is the bonds. And I mean, it's pretty normal for the bonds to be quite back and forth. And the fact that we had such an aggressive push higher, we also topped off with a wedge. In that wedge top, we're kind of breaking out a little bit sideways. And chances are, it's the same situation that we saw on all of the other markets. Nobody really wants to buy at the extremes or sell at the extremes anymore. They want to get better prices. In this case, better prices, I'm looking for at least a pullback down to 146.20, if not a little bit further, down to 146.16, down to 12 or so. This area is kind of where you want to look for that buying pullback. That's the latest area where we had congestion before the breakout to the upside, and that's also where we had the break up into the wedge. So these two areas are going to be big hotbeds for buyers to potentially scale back in, and that would be for a run back towards the highs once again to see if they can get that breakout and this continuation of the bullish run. Everything's still pointing to the upside. It's just a matter of getting a deep enough pullback to where the buyers find value again to jump back up to the towards the top. Over on crude, we have a relatively strong, and I think relatively is an understatement here, a very strong breakdown. We had, that earlier news that came out. If you were watching the psychology video today, we had some news coming out of OPEC that Saudi Arabia was increasing production, etc., and that caused a pretty big drop in price. Now, that big drop in price, we did find a little bit of inventory between 47.75 up to 73 or so. And it appears as though every time the market wants to come into that area, it rejects back down. And we are right back in that location again. We are also lining up with the top of a wedge, and we have a lot of other things kind of stacking up in the same place to try to turn the market lower here. So right now, what I'm really looking for is for the market to want to find a balance for selling pressure to drive the market back down to attempt the lows. We do have a rising area of support, so I'm not necessarily looking for a brand new low because we just might not get it, right? With this amount of bullish pressure in the market, what I'm looking for is a sell back down to that rising support and then find maybe some bouncing here. And if we can break through it, then looking for the sell move back down to the low of day. Overall, though, still looking to be a seller, but, right around this area is exactly where we want to be looking to get in, and we just had a little bit of a head fake above the top. Another nice area that could be a potential area of interest for sellers is if you get one more test of the highs, a little bit of a double head fake. Very frequently with these big levels of support and resistance, the market will want to come back to it, hold it to show that the sellers are a little bit interested. The market will then want to come back and retest it as proof. Okay, sellers, you held it one time. Do you want to hold it again? And if that secondary attempt holds, that's where I personally like getting into those kinds of moves for the bigger drive lower. And sometimes it doesn't happen, right? But that's what I'm looking for, is a little bit of a double head fake on the highs for a turn back towards the bottom. Now, over on the Nasdaq, we also saw a very large bearish drop lower in a very aggressive final leg, right? Aggressive first leg down, and then we had an aggressive second leg down, and then a third leg just blowing the other ones out of the water for a very parabolic spike down. Now, whenever we run into a situation where we have a parabolic spike down, one of two things is going to happen. Either we go range bound and then break down again, or we catch a big reversal, which is that V bottom that we've been seeing throughout the markets today. That V bottom tells us that we don't necessarily want to be selling down here anymore, especially not with the buyers gaining proof. We want to be selling up in an area of earlier congestion, right? The market gives you information, and when the market comes back to those areas, how do they want to respond? The sellers were obviously interested in this location to sell it one more time, given that reaction. Are they still interested? Right? We're at the top of the wedge. We're testing major resistance at 53.87 half, 53.86 and a quarter, 53.83 and a quarter. All inside this area is a huge band of selling pressure to try to drive the market back down. I'm looking for kind of the same thing that we were talking about on crude. They just poke their head above, see if they can do it one more time, and then turn lower. I would love to find some selling pressure from that point to continue this bearish momentum down. Maybe not all the way to a new low, but at least one heck of an attempt, maybe down to that 53.72 half area. And then finally on the S&P, another very strong bear market working its way lower, and we're pulling back into major areas of resistance. Another parabolic move here as well. We can see nice strong move, good strong move, and then whoa, they might have gone a little bit too much. That gas pedal was a little heavy on that final move, and very frequently when that happens, they want to come back up towards that area. So we are testing that first boundary at around 23.63 and a quarter down to 62 and 3/4, but what I would really like to see is for them to get up back towards the top of where they started that breakout in the first place, around that 65 quarters, 65 half area, to get that breakdown back towards a new low. Again, it's another one of those situations where I'm not necessarily looking for a brand new low, but a good attempt at one. Finding balance at around 57 half would make a lot of sense for sellers to start looking to take profit in that zone. Either way, though, looking to sell, and this is the area that we want to do it, just maybe a little bit higher. Might not get it, we might, but either way, looking to accumulate possible selling up here for a move lower. So that's going to do it for the overview. Looking at the news for tomorrow, again, we have a ton of news slotted for tomorrow. Not only do we have early morning news at 5:30 for the UK, those are some big numbers, but we also have 8:30 news between the core CPI, the core retail sales, the retail sales month over month, and tomorrow is also inventory day. So no market is safe tomorrow. Everything is expecting to see some pretty big news. But if that wasn't enough for you, at the afternoon session, 1400 Eastern Time, we have the FOMC economic projections, the FOMC statement, and the federal interest rate decision. These are huge, huge numbers. I can't say it enough for tomorrow's trading. Be careful. Be careful, be careful, right? Tomorrow's price action in the afternoon could get very messy, and all day tomorrow, for that fact, could be messy. A lot of traders are going to see this just massive chock-full day full of news, and, well, the only thing on my mind would be, well, I want to get in early and I want to get out early, and I just don't want to deal with any of this. And then later, 14:30 Eastern Time, the FOMC press conference as well. So really, all day tomorrow has huge amounts of news, and, well, there's not really much of a break in it. Even crude oil has news tomorrow. So just play it really, really safe. And like we always say, make a plan, trade that plan, follow those rules, and you will be A-okay. Until tomorrow, have a good one. Keep that hard helmet on, because tomorrow might be a wild one, and we will see you all tomorrow.